Good morning, students. Now, I'm myself, Dr. Narendra Rally, Assistant Professor, Department of PG, Department of Commerce and Management Studies, VSM College Autonomous, Ramchandrapuram. I'm here to explain you on the concepts of investment management. In this video, let us discuss the selection of investment and types of investors. Selection of investment. Selection of investment. The selection of investment is the choice of right security or fund to best use to take a particular exposure to the targeted risk or asset. Here, it is the right security or fund. The choice of right security or fund. So that is you have a choice. Choice of what? The choice of right security or fund. The choice of right security or fund, that is to best use to take a particular exposure or to the targeted risk. Choice of right security or fund, that is to take a particular exposure to risk, that is to take a particular exposure to risk. Therefore, the investment selection process is perhaps the most interesting and intellectual part of investment management. The ability to choose the right investment or the right company is the most rewarding concept, rewarding because it is close to people and the real economy. The selection process used to be simple, let's just use it to be the simple bond and stock selection. But in recent years, with the emergence of strategies and formulation in the private equity arena had led to plethora of funds. So earlier it used to be only either equity or bonds. But now there are plenty of avenues. Therefore, the investment selection criteria is the selection of investment policy. This investment policy statement, which includes the rules for choosing investments, and therefore these rules will vary significantly from investor to investor based on based on each investor's investment philosophy. Therefore, the selection of investment, so it depends or it differs from person one to person two, because the person one's goals may be different and the person two's goals may be different. Therefore, the investment selection criteria differs from person to person. Criteria to consider while investing in mutual funds. So, here, while investing in mutual funds, by now you may know what is a mutual fund. Mutual fund is mutual fund is an investment fund. That means it aggregates funds from the small people, pool all the funds and invest such fund in the stock market. So this mutual funds. So in order to select mutual funds also, there is certain criteria. What is that criteria? How do we select the mutual funds? Criteria to consider while investing in mutual funds: the maximum bear market rank, The maximum bear market rank, maximum expense ratio, so minimum or maximum asset size, so minimum manager tenure, minimum category rating. So these are all the criteria for selection of mutual funds. And what is the selection of what is the criteria for selection of stocks? So here the selection of stocks based on return on equity and free cash flow, minimum dividend yield, maximum price for each stock, the minimum market capitalization, that is how much the market capital is to be, minimum price earnings ratio, revenue growth rate, etc. All these criteria you will be learning in the company factors in your fifth unit, that is fundamental analysis. So this is all about selection of investment. So let us now discuss about who is an investor. Who is who is an investor? An investor is a person who allocates capital with the expectation of future financial return. An investor is a person who allocates capital who allocate capital with the expectation of with the expectation of future financial return. Therefore, a person who provides a business with capital and the one who buys a stock or bond are both the investors. An investor who owns a stock is known as a shareholder. So this is basically the basic or the layman language, or technically what is an investor means. An investor is a person who allocates capital with the expectation of future financial return. Such capital maybe he or she can bring it for the business, or maybe he or she buy the stocks. Therefore, so this is who is an investor. Now let us understand what are the types of who is an investor, and what are the types of investors. Investors are of different kinds. Types of investors. Investors are of different kinds. We can categorize the first one. Let us say cautious. A cautious investors are very conservative. They are this type of investors who has a need for financial security and therefore will avoid high risk ventures as well as listening to professional advice, preferring to conduct their own financial affairs. They don't like to lose on even small amounts of money and never rush into investments, always giving financial opportunities a great deal of thought. Here, the word itself says cautious. The word itself says cautious. That is, they are very conservative. Conservative in the sense these investors will not they has a need of financial security. They always conserve, or they always want their capital to be secure. They will not ever risk their capital. They avoid high risk investments. Therefore, these people are known as cautious. And also, these people will not follow the professional advice. That means they follow their own rules, they conduct their own financial affairs. They don't like to lose even a single penny of money, and therefore never rush into investments. Emotional investors. The second category is emotional investors. The emotional investors are easily attracted to fashionable investments or hot tips. These investors act with their heart and not their head. A whim or a gut feeling leads their decisions, and they have great difficulty disengaging from poor investments or cutting losses. They have an unreasonable belief that things will come right in the end and often put their trust in luck or providence to safeguard their financial assets. Here, the word itself says emotional. They are little bit emotional. They are little bit emotional. They are attracted to fashionable tips. While in the news when they say that, for example, the Reliance Industries share is going to upwards. Say it's a prediction. They will so buy Reliance. So they follow that tip. They follow tips. These investors act with their heart and not their head. They they used to follow investments with heart, not brain. And the next category of investors are technical investors. The next category, technical investors. Who are the technical investors? Technical investors are hard facts members. Leading this type of investors to active trading based on price movements. They are screen watchers. So technical investors are those investors who watch screens. Who watch screens. So what do you mean by the screen? What do you mean by the screen? What do you mean by the screen? Yeah. So the technical investors the always look into the price movements. The technical investors always look into the price movements. That is, they will follow the price movements and its ups and downs. So they are screen watchers. That's why we say they are screen watchers. They are sometimes obsessional, but their diligence can be rewarded if they spot trends. They are obsessed with these trends, but if there is some luck, if they try to identify the spot, they identify the spots. If they try to they identify the spots, they can be rewarded. They may also have a tendency to need and buy the latest technology as they are always looking for some edge. And next category is casual, busy investors. The next category is busy investors. Busy investors need to be involved with the market. It gives them a buzz when they check the latest price movements, which may be several times a day. So since you already know that the stock movement fluctuates all the day, all the trading hours, fluctuates. The stock movement fluctuates. Therefore, tracking all the day, that is tracking all 18 hours or somewhere around the stock market's opening arena, so it is difficult for them. Therefore, they are known as busy investors. Because they are known as busy investors, they have to keep buying and selling on rumors, on overhead gossips, and from the mass of newspapers and magazines they collect. Any tidbit of information they can glean is imbued with significance of a cause to take financial action. They have to take buying and selling based on rumors, news, the whatever they heard, they believe that it is true. Therefore, they are known as busy investors. And the next category is casual investors. Casual investors who have a laid back attitude towards the investment, they sit and relax. These individuals are often hardworking and involved with work or family. They tend to believe that once an investment is made, it will take care of itself, and that a good job or profession is the way to make real money. Therefore, they easily forget that they own investment assets and rarely check on their financial investments. Management advice, and though they may leave on running of their investments to professional advisors, they haven't been in contact with them years. Casual investors are those investors Casual investors are those investors who they, 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 they hand over their investments to the professional managers, and they ignore, or they will invest in the management. They invest in the funds and they go back to their work and ignores their investments. Therefore, they are known as casual investors. And the next category is informed investors. Informed, the name itself says informed. Informed investors use the information from a variety of sources and keep ongoing watch on their investments. They are known as informed investors because they follow every information. They follow each and every information on their investments, the markets, and the economy. They listen carefully to financial opinions and expert assessments and will only go against the market fashion after weighing up all the pros and cons. So they are financially confident and have the faith in their decisions. Therefore, knowing that knowledge and experience will always win out to give them long-term profits. So these are known as informed investors. And the next category is passive investors. Passive. Passive investors are characterized as individuals who have become wealthy passively by inheriting by a professional career or by risking the money of others rather than their own. To these investors, security is more important than risk. In addition, certain classes of occupation are more likely to contain passive investors. Corporate executives, lawyers, accountants who work in companies. The reasons for this are that these individuals are less likely to have a financial resources at an early stage in their career. Having had to delay earning good salaries in order to study or having to repay student loans, or once earning a decent wage, they are then more careful with their money, therefore having a greater need for security. Anyone, therefore, with the reduced financial resources is likely to be more risk conscious. And the next category is the opposite of passive. that is active. According to Branwell, active investors are those who have achieved significant wealth or earned wealth during their own lifetime. They are more likely to take risks in investment because they have a previous experience of taking risks in their previous wealth creation. These individuals have a high risk tolerance and less of need for security. They also need to feel in control of their own abilities. Once they feel they are losing control over the investment situation, their risk tolerance reduces. Therefore, by being actively involved in control, these investors feel they are reducing risk. However, such involvement may actually be detrimental as it likely to be a source of irritation to their investment advisor. Therefore, it may actually be detrimental. The classes of occupation that are likely to be in the active owners, small business owners who have developed their own business rather than inherited, the medical surgeons, independent professionals, lawyers, etc. These professions are mostly the active investors. So by this, you there are totally eight types: cautious, emotional, technical, busy, casual, informed, passive, and active investors category. By this, you know what is selection of investment and types of investors. Thank you.